In 1973, a conflict in the Middle East triggered one of the most dramatic economic shocks in modern history. Oil exporting countries suddenly restricted supply, and within months, the price of oil quadrupled. Gas stations across the United States ran dry, cars stretched for blocks in long lines waiting for fuel. Inflation surged, economies slowed, and millions of people who had never thought about geopolitics suddenly felt its consequences in their daily lives. At the time, most people didn't understand why it was happening. To them, it looked like a distant conflict between countries thousands of miles away, but the truth was much simpler and much more uncomfortable. When a conflict threatens the global energy supply, it doesn't stay regional for long. It spreads quietly through the global economy, eventually reaching something far closer to home: your wallet. Today, tensions between the United States and Iran raise a similar question. News headlines focus on missiles, military movements, and political consequences, but beneath all of that noise lies another story that often gets overlooked. A potential conflict between these two countries doesn't just reshape geopolitics, it can reshape markets, prices, and the everyday cost of living. To understand why, you have to start with geography. Iran sits beside one of the most strategically important waterways in the entire world, the Strait of Hormuz. It's a narrow passage connecting the Persian Gulf to the global ocean, and through that narrow passage flows nearly a fifth of the world's oil supply. Every day, massive tankers carrying millions of barrels of oil move through this corridor toward Europe, Asia, and North America. Because of this, any threat to that shipping route instantly affects global energy markets. If traders believe supply might be disrupted, oil prices begin rising almost immediately. Not because the oil has disappeared yet, but because markets react to risk long before shortages actually occur. This reaction happens incredibly fast. Within hours of geopolitical escalation, oil futures markets can move sharply. Traders, companies, and governments begin pricing in the possibility that energy might become harder to obtain. Even the fear of disruption can send prices higher, and when oil prices move, the rest of the economy rarely stays still. Energy sits at the center of modern economic activity. Almost everything we consume depends on it in some way. Trucks transporting groceries rely on diesel fuel. Airlines rely on jet fuel. Factories rely on electricity generated from energy resources. Shipping companies rely on massive fuel-powered cargo ships to move goods across oceans. When energy becomes more expensive, those costs ripple outward across the entire system. Transportation becomes more expensive. Shipping becomes more expensive. Manufacturing becomes more expensive. Eventually, those higher costs reach consumers in the form of higher prices for everyday goods. This is one of the reasons wars and geopolitical conflicts often show up in inflation numbers months later. At first, the connection feels distant. A headline about conflict somewhere across the world seems unrelated to daily life. But slowly, quietly, the costs move through the system until they appear in places people notice most: the gas pump, the grocery store, airline tickets, and heating bills. And this is only the first layer of economic impact. Financial markets also react rapidly to geopolitical tension. Investors tend to dislike uncertainty more than almost anything else. When conflict appears unpredictable, many investors reduce risk in their portfolios. Stock markets can become volatile. Certain industries decline while others surge. Historically, wars and geopolitical conflicts often trigger a shift in capital. Investors move money away from riskier assets and toward what they consider safer stores of value. Gold prices often rise during periods of global instability. Energy companies sometimes benefit from higher oil prices. Defense contractors may see increased demand as governments expand military spending. The strange result is that while wars can harm the broader economy, certain sectors quietly become more profitable. This dynamic highlights an uncomfortable truth about the global financial system. Economic shocks rarely affect everyone equally. Some industries suffer, others benefit. Some investors panic, others quietly accumulate assets while markets fluctuate. Understanding these patterns doesn't remove the human cost of conflict, but it does reveal how deeply interconnected geopolitics and finance really are. Another major economic consequence of war risk involves central banks and interest rates. If energy prices surge, inflation tends to follow. Central banks like the Federal Reserve closely monitor inflation because it affects the stability of the entire economy. If inflation begins rising too quickly, central banks may delay interest rate cuts or even increase rates further to slow spending. Higher interest rates ripple through the economy in their own way. Mortgages become more expensive, car loans become more expensive, business investment slows, economic growth becomes more fragile. In this way, a geopolitical conflict thousands of miles away can eventually influence something as personal as the monthly payment on a home or a car. But beyond all these economic chains lies an even deeper reality about how global events affect personal finance. The global economy operates as an interconnected system. Energy, trade, finance, and geopolitics form a web where disruptions in one region can echo across continents. A shipping route threatened in the Middle East can influence energy costs in Europe, manufacturing costs in Asia, and inflation numbers in the United States. Most people only see the final result of this chain reaction. They notice rising prices or volatile markets, but the original cause often feels distant and abstract. This is why understanding the mechanics behind these events can be so valuable. When you recognize how global shocks propagate through the financial system, market movements start making more sense. Instead of appearing random, they reveal patterns shaped by supply, risk, and human behavior. The truth is that global conflicts often redistribute economic pressure rather than simply destroying it. Certain industries struggle while others expand. Certain investors panic while others reposition themselves. But for everyday households, the impact tends to be simpler and more immediate. Higher energy prices often mean higher living costs. Inflation squeezes budgets. Uncertainty affects job markets and financial stability. And this is why geopolitical events rarely stay confined to maps and headlines. They eventually travel through supply chains, markets, and policies until they influence the financial lives of millions of people who may never follow international politics at all. The world economy is more connected than most people realize. The price of a barrel of oil in the Persian Gulf can influence the cost of groceries in American supermarkets. A tanker delayed in a narrow strait can influence airline ticket prices months later. Decisions made by governments and militaries can ripple outward through markets, investments, and household budgets. And once you begin noticing these connections, global events start looking very different. Instead of distant headlines, they become signals moving through an interconnected system. The truth is that understanding money requires looking beyond spreadsheets and stock charts. Sometimes the forces shaping markets are geopolitical, historical, and deeply human, because in a globalized economy, the lines between politics, energy, and finance are rarely separate. They move together, shaping the economic environment in ways that affect everyone. Before you go, I want to ask you something. Do you think events like wars should change how people invest their money? Or should long-term investors ignore short-term geopolitical noise and stay focused on the bigger picture? Let me know in the comments. And if you enjoy learning about money, discipline, and financial freedom, consider subscribing. I post simple lessons like this every week.